Please bear with me as I have a bit of a cold today, but hopefully you can still understand what I'm saying. Now, looking at this image here, this image, it's called a thumbnail by YouTube, and you create a thumbnail for every video that you do. And for every video that I do, I try to include a thumbnail image that has a clue to the day's topic. And this image here is perfect for today's topic. The images of a water drop that's created a depression, and then we have a reflection, and then when the water comes back down again, it's going to create another depression and so on, and it creates a ripple effect. And that's exactly what's happening in the market. We've talked about this in different ways and manners, but that's exactly what's happening. So let's just take a closer look at what's going on in the market today. So with regard to the ripple effect, let's first take a look here at the CBOE volatility S&P 500 index. This is the VIX, the volatility index. Now, if you go back, just looking here at the price chart, you go back here, you can see certain times in history when there's been a move and then a subsequent move. And then here's a move and a subsequent move. And here's a move and a subsequent move. Now, this is the biggie, and we're not talking about this, but we're talking about the ripple effect. Here's a move, and much later, a subsequent move. Here's a move here, and a subsequent move. And then what we're experiencing is this move here in the VIX earlier in 2018, and this is just another subsequent move or a ripple effect. Let's go down here. You can see it in the MAC as well. Maybe not as well, but you can see a move here and then a subsequent move there. This move here earlier this year and then this move here. Going back, you can see other moves that you've got the initial and then the ripple effect or a secondary move. It's not really all that well shown in some of these other oscillators, but you can still see it, such as here, early 2018, and again here, and moving on down once more here and here. So basically, what we're experiencing right now in the market is just simply the ripple effect. The main event for this year happened earlier, and this is just a secondary. And sometimes in these secondaries, there can be a tertiary move as well. But we're not going to take a look at the VIX any longer. Let's just go to the price charts on the S&P, and I'll show you more examples there. So we're looking at the 5-year weekly on the S&P. I wanted to go back this far so we could take a look at 2015, 2016. So with regard to the ripple effect, you can take a look at it in a more macro view or a micro view. Let's do both. And so here in say mid-late 2015, we had a move. And then to me, this is a ripple effect. The same sort of thing that we had in early 2018 is a move and a ripple effect. But within each move, there's also a smaller tertiary ripple effect. And you can see that here. We had this bottom there. It moved up and came down to that point there. So that's a ripple effect, but it's a tertiary compared to these larger moves. And here we had that bottom. We came up and came down. Here, the bottom, up and down, and the bottom, up, and we're just coming on down. This often forms the W formation here. Not necessarily all that well defined. Can look ugly, such as this one here, but basically that's what happens. Here we have the bottom gone up and down here. So now all we're waiting for is the move up, and can't really say how it's going to take place and how long it's going to be. Is it going to be a sharp turn up, or is it going to take its time and move on out, kind of like this one did here? But that's all that's happening. We're just having a run-of-the-mill correction. We need to let it run its course. Moving here, you can see the same sort of thing there. We've already looked at this before. Here, up, and then back down again. Now this one is a little bit steeper in the decline, so that may make it feel worse. But this one was a little bit lower. So that was bad enough back then. So here we are. You see it in the other oscillators, how it creates these formations. And just study that and get comfortable with it because these happen often enough, as you can see here, often enough. And so you just simply need to understand what's happening and then you can take advantage of it. First thing, don't make any mistakes. Don't do any selling at the bottom of these things. Get an understanding of what's happening in the market and then take advantage of it. But the rule number one is don't make any mistakes. So that's all that's happening. Run of the mill correction. Stop watching all the dramatic news on all those business television channels. So for today, that's ChewDog Charts. Thank you.